Hello everyone, we are from Polytechnic Sultan Salahuddin Abdul Aziz Shah. We are doing this video for our course Macroeconomics. We are the students from the class DPM2C.
Next, let's get to know the group members. Firstly, there is Vargheswarna, daughter of Seher, with the matrix number 08 DPM 22 F1210. Secondly, there's Dacharnisha, daughter of M. Manivannan, and her matrix number is 08 DPM 22 F1065. And lastly, there's Subhashini, daughter of M. Venkatesan, with a matrix number 08 DPM 22 F1100.
Our topic today is going to be about a project issue which is the monetary policy statement of B&M, Bank Negara Malaysia.
Hello everyone, my name is Vargheswarna, daughter of Seher, and my matrix number is 08 DPM 22 F1210. Now, in this slide, we're going to look at the interpretation of monetary policy first. Now, what is monetary policy? Monetary policy is a set of tools used by a nation's central bank to control the overall money supply and promote economic growth, and also to employ strategies such as revising interest rates and changing bank reserve requirements. Monetary policy is commonly classified as either expansionary or contractionary. For an example, policymakers manipulate money circulation for increasing employment, GDP, price stability by using tools such as interest rates, reserves, bonds, and etc. Secondly, we are going to look at the interpretation of overnight policy rate OPR. The overnight policy rate is an overnight interest rate set by Bank Negara Malaysia (BNM) used for monetary policy direction. It is the target rate for the day-to-day liquidity operation of BNM. The overnight policy rate OPR is the interest rate at which a depository institution leads immediately available funds balance with the central bank to another depository institution overnight. The amount of money a bank has fluctuates daily based on its lending activities and its customers' withdrawal and deposit activity. Therefore, the bank may experience a shortage or surplus of cash at the end of the business day. Those banks that experience a surplus often lend money overnight to the banks that experience a shortage so that the banking system remains stable and liquid.
Bank Negara Malaysia (BNP) today increased the overnight policy rate (OPR) by 25 basis points (BPS) to 2.75%, marking the fourth consecutive rate increase this year. This year's increase was in May, with the central bank pumping up the OPR by 25 bps from a record low of 1.75% during the COVID-19 pandemic. It again raised the benchmark rate by 25 bps in July and delivered a similar increase in September. The Monetary Policy Committee (MPC) decided to further adjust the degree of monetary accommodation against the backdrop of continued positive growth prospects of the Malaysian economy, as well as to keep inflation in check. The adjustment will be pre-implicitly manage the risk of excessive demands on price pressures considered with the recalibration of monetary policy settings that balance the risk to domestic inflation and suitable growth. MIDF research said the latest OPR increase is in line with market expectation. From a medium-term perspective, policy rate normalization is needed, even discussed that could be destabilizing the future economic outlook, such as persistently high inflation and a future rise in household indebtedness.
Following that, I will explain on how household firms will be impacted by the rise in OPR. First of all, there will be increase in monthly payment. Increase monthly payment installments whenever the OPR goes up. Banks will pass on the higher borrowing costs in the form of a higher interest rate to the consumers, which in turn increases the amount of your monthly installment payments. A 0.25% increase in OPR for a RM 500,000 home loan with a 30-year tenure is likely to increase the monthly installment payment by RM 71. This means that the borrower will have to pay an additional RM 25,560 ringgit in total for interest payments in that 30-year period. Secondly, loan tenure will increase if the monthly installment amount is maintained. If the old monthly installment sum is maintained, the repayment period will become longer due to the increase in interest rate. For example, if you have a 30-year housing loan of 500,000 ringgit at an interest rate of 3.83%, the monthly installment will be RM 2367. When the OPR is increased by 0.25% and as soon as the bank's interest rate is increased to 4.18%, the repayment period of your home loan will increase by 2 years to 32 years if you choose to keep the monthly payment installment amount at RM 2367. Thirdly, which is the last point, is the fixed deposit rates will increase. Loan interest increasing would also mean that the fixed deposit interest, saving interest, and so on will increase in tandem too. Therefore, if you have substantial savings, this increase in OPR will enable you to earn more. Check your latest MyCitos score report to stay on top of your credit health and see all your current outstanding loans so you can better manage your finances to mitigate the OPR increase.
As a conclusion, the rise in OPR brings a lot of impacts to our country economy system. As in example, the higher the OPR is set, the higher the cost of borrowing will be. This will lead to fewer capital financing opportunity as banks will be tightening the prerequisite requirements of both individual and business to secure the loans. Is this the conclusion is made?
That is all from us. Thank you for watching. If there's any question, do let us know in the comment section.